Middle East crisis. Is crypto retreating or ready to surge? Today feels like a perfect storm. Tensions are rising fast in the Middle East. The US just passed the most sweeping crypto legislation in history. And Bitcoin, it's caught right in the middle. I'm Neil, and if you've been here before, you know I go beyond the headlines. We dig deeper into what really matters, so you're not caught off guard when markets move. If you haven't already, make sure to like, subscribe, and turn on notifications so you don't miss what's coming next. Now, what does all of this mean for your portfolio? In this video, we are breaking down what's really driving the recent price drop, what the new stablecoin bill actually changes, and why this quiet period for Bitcoin might just be the calm before the storm. This is when most people panic, but smart money, it moves quietly. Let's dive in. Let us start with the Heatmap and see what the numbers are showing us. We kicked off the session around 107.1k. That was a small dip early on, but it didn't last long. The price tried to recover, but then we saw a slow, steady decline all the way down to 103.3k. Or during that drop, we saw a sweep of long liquidations from 106.5k down to 104.1k, all getting wiped out all along the way. Once the price hit that support zone, it held. The level proved solid, and we saw a rebound, climbing back up to 105.3k. But the resistance zone was too strong and the price got rejected. From there, it started moving sideways, finding some short-term stability. At the time I'm recording this, Bitcoin is trading around 104.6k. Now, let us zoom in on the liquidation zones. On the upside, we've got a thick stack of short liquidations. You will see them on the heatmap as yellow and light green bands. The major ones are sitting at 105.3k, 105.7k, 106.3k, 106.5k, and 106.8k. And if we go even higher, up toward 111k, you will notice a few thinner lines of liquidations, but they are still there. So, if price starts to climb and breaks past resistance, we could see a cascade of shorts getting taken out. Now, let's flip it and look below. Under the current price, the support levels aren't as densely stacked as the resistance above. You will see dark green and blue zones between 104k and 102k. That means the downside support exists, but it's not as aggressive or defended. So overall, the heatmap tells a clear story. Resistance is heavy, especially between 105k and 106.8k, while the support base below is thinner and more fragile. The next few moves will likely be defined by how Bitcoin reacts around that 105k, 106k range, break above. And things get exciting. Fail and we may test that 102k support again. Okay, heatmap's done. Now, time to check in on the CVD data and see what the whales are doing behind the scenes. Let us start with the mega whales. These are the big guys placing trades between 1 million and 10 million USD, shown here as the brown line. And it's the same story as yesterday. After a stretch of aggressive buying, they are now sitting back and watching. No major moves, no clear conviction. So for now, they are in pause mode, just waiting to see what happens next. Next up, the purple line, which represents the second largest whale group. They started the day on a buying trend, but then flipped into selling. And that kind of shift usually signals hesitation, or maybe even some short-term bearish sentiments. Meanwhile, the mid-sized players, the red and green lines, are still selling steadily. No sign of reversal yet. But here is something interesting. The smallest group, the orange line, the so-called shrimps, they are buying. It's not a huge wave, but they are stepping in quietly. So, here's the takeaway. We are seeing some buying, sure, but it's mostly coming from the smaller players. The bigger wallets? They are cautious. Some are even taking profits or reducing exposure. That tells us the buying strength is still weak and selling pressure is holding strong for now. But, as always, don't let the calm fool you. When big players sit still like this, it's usually the calm before the storm. I know I'm repeating myself, yeah, but it's true, period. Let's talk about the obvious. Tensions in the Middle East are escalating fast. President Trump initially intervened to try to de-escalate the ongoing Israel-Iran conflict, but now he's openly considering military action against Iran, even calling the Iranian leader an easy target. That escalated quickly. A recent National Security Council meeting reportedly discussed direct strikes on Iranian targets. Markets hate uncertainty, and we saw it. All spiked over 4% in a single day, and all three major US stock indexes closed lower. Retail sales were also down, reflecting consumer anxiety. This tension is fueling a global risk-off sentiment. The US is even deploying its most advanced fighter jets to the region. All of this points to one thing: the world is on edge, and markets are showing it. Then, Iranian state media released a chilling message, a great surprise the world will remember for centuries. Not exactly reassuring neither. That statement alone shook the crypto markets, which explains the dip you saw on the heatmap on section 1. Equities also slipped. We saw recently that macro tensions like this trigger a flight to safety, but right now it's still unclear whether Bitcoin is being seen as a safe haven hedge or more of a risky asset. Time will tell. Now, let us talk about something that should have been massive news. Legislation! The US Senate just passed the most comprehensive crypto bill in history, the Genius Act, also known as the Stablecoin bill. The vote? 51 to 23. Why isn't the market reacting? Simple. It was expected. The bill's passage was already priced in. But here's the key point. Just because price didn't move doesn't mean this isn't a huge deal. In fact, this is one of the most important long-term wins for crypto in years. The Genius Act lays the groundwork for serious institutional capital to enter the stablecoin space. That, in turn, supports broader crypto adoption. We are talking about real regulatory clarity. At the highest level, this is a green light for the next wave of capital to flow in. Here is what the bill actually does. It clearly defines who can issue stablecoins: federally qualified issuers, insured depository institutions, and their subsidiaries. It requires one-to-one reserves, cash, treasuries, or balances at the Federal Reserve. It enforces strict penalties, up to $1 million per day in fines and as much as 5 years in prison for unauthorized issuers. And it brings real AML, custody, and compliance standards to the entire stablecoin sector. So, again, why the flat price action? Because it was mostly baked in. But don't be mistaken, silence does not mean insignificance. Regulatory clarity like this is exactly what institutions have been waiting for. And we are already seeing signs. JP Morgan just launched a pilot stablecoin on Base, Coinbase's Layer 2. Add that to BlackRock's steady ETF inflows and you start to see it. Quiet institutional demand laying the foundation beneath the surface. Despite all the geopolitical fear, Bitcoin spot ETFs are still seeing inflows. Over 486 million USD just yesterday. That's 6 straight trading days on net inflows. So what's going on? Short-term holders are panic selling. Long-term holders are accumulating near all-time high level. CDD, coin days destroyed, is low. Signal of smart money holding. Trading volume is at multi-years lows, typically a sign of stealth accumulation. This tells us something big. Institutions aren't panicking, they are accumulating. On-chain data confirms this. Long-term holder spending is near record lows. We have seen this setup before. When long-term holders go inactive, it's often followed by major price rebounds. Also worth noting, trading volume is sitting at multi-years lows, but that's not necessarily bearish. Low volume like this often shows up during stealth accumulation phases, especially when spot ETFs are quietly absorbing more of the supply. So, here is the takeaway. Institutions aren't panicking, they are accumulating. Let's talk technicals. Bitcoin is consolidating around the 104K level. It's stuck under the 22-day moving average, but critically, it's still holding above the 52-day line. And why is that critical? Historically, every time we've bounced off the 52-day line and stayed above it, we have seen strong rallies within a few weeks. RSI is slightly below 50, showing weak momentum, but this could flip quickly with a catalyst, like a favorable FOMC announcement or geopolitical de-escalation. Meanwhile, on the adoption front, things are accelerating. Brazil is reviewing a bill to allocate 5% of reserves to Bitcoin. Spain's second largest bank is offering Bitcoin investment to wealthy clients. Ukraine is formalizing Bitcoin custody legislation. These are not small developments. There are signs that nation-state level adoption is accelerating. So, to wrap things up, yes, things are getting tense out there, but while the headlines scream fear, the data tells a different story. Institutions are stacking, regulation is catching up, and long-term holders? still holding strong. And remember, this is usually when the big move starts, when no one's paying attention. So, what about you? Are you waiting it out or slowly adding to your bags? Let me know in the comments. And if this video helped you to see the bigger picture, make sure to like, subscribe, and share it with someone who needs it to hear this. I'm Neil, thanks for being there. Catch you in the next one. Bye bye.